Hello and welcome. In this video, we will learn who the hidden players of the stock market are. Alright, we have learned about small players and big players. Now it is about hidden players. Now these hidden players are not directly involved with the stock market, but they affect the movement of the price in the stock market. Alright, there are many hidden players and we will learn about all of those one by one. Okay, let us start. The first hidden player or players are news channels. Okay, what do they do? There are news channels which are dedicated to the stock market, in the sense dedicated to finance. Now these news channels invite analysts or panelists who are so-called experts in the field of investment or the stock market. They come to the news channels for a show and they give their opinion about a stock or about a sector. And we, the people who watch these news channels, buy or sell stocks according to their suggestions. And when we do that, the price of the stock moves. Correct? Now these panelists or analysts, how can we trust them? How can we say that they are not biased? We are not saying they are biased, they may not be, but how can we be so sure? How can we trust that the suggestion that they are giving is in our interest? Correct? They might have been paid by someone else, or they may have their own interest in recommending some stocks. Right? Now, this kind of suggestion also happens on the social media. For example, there are many channels on YouTube which give recommendation for stocks. They say that buy this stock, this will move up in these many days and you can sell them. But then, how can we trust them? How can we know their hidden motives? We cannot, right? So whenever you watch a news channel or anything on social media, do your own analysis before buying or selling. Because if you are a new investor in the stock market and you take their suggestion and just go out and buy the stocks hoping that the price will go according to their suggestion, you risk ultimately failing. Alright? So be cautious about this. The second hidden players are brokerages. Alright? Brokerages earn their money when we investors or traders trade in their accounts. When we buy shares or when we sell shares or when we buy or sell options or futures, they get brokerage, meaning a small percentage of money. So if I am an investor and if I buy some stocks today and then do nothing for 2 or 3 years, then the brokerage firm will not be earning anything from my account. Correct? They need to earn, and for them to earn, we need to trade. We need to trade as many times as possible. To do that, these brokerages give tips and suggestions. They also recommend stocks to us. They call us and they tell us this is a good stock right now, it is at its lowest point, and it is better if we buy it. And when we go according to their suggestion, when we perform the buying action or selling action, they earn a small percentage of money or brokerage. After some time, they will call us and say that this is at its highest point or it has reached the target, and so it is better to sell it off. And when we sell it, they earn a small percentage of money or brokerage. So brokerages earn when we trade, and they want the price of stocks in the market to move up and down also. Okay. So once again, be cautious about recommendations that you get from brokerages. The next hidden players are rating agencies. Okay. Credit rating agencies. There are many credit rating agencies, but the famous or a few famous ones are CRISIL and CARE. Okay. Their main job is to analyze a company's ability to pay back its debt. They give ratings like AAA, which is very safe, or D for default or junk, which tell lenders how risky it is to give that company a loan. If they downgrade a company's credit rating, then it signals financial trouble, which can scare all investors and cause the stock price to fall. Okay. Next, we have equity research analysts, often at brokerages. They analyze a company to decide if its stock is a good investment or not. They are the ones who give ratings like buy, sell, hold, or outperformer, etc. A strong buy rating can make a stock's price go up because everyone will start buying the stocks looking at their suggestion or rating, right? So these guys or these people also affect the stock price. Next, we have activist short sellers. I have listed a few, there are many others. Now, these are not neutral rating agencies, they are activist short sellers. Their job is to find companies they believe are involved in fraud and then bet against the stock, and after that publish a negative report, or I can say publish the report. Their goal is to make the stock price crash so that they can make a profit out of it. Okay. Recently, you might have heard about Hindenburg, okay, in the news. Hindenburg had submitted a report on the Adani Group accusing them of wrongdoing, due to which investors lost millions and millions of rupees and the stock price went down drastically. Okay. So these are some of the hidden players of the stock market. All right. They are not involved in the stock market directly, but they can affect the price of a stock. All right.